Look down here at the bottom of the chart for a second. See this main line flipping above and below the zero line, wrapped inside these trailing bands? And notice how sometimes the whole area fills with color and it really stretches out, and other times it just hugs the middle and goes quiet? That's the Momentum Trail Oscillator doing its thing. Now here's the problem it's trying to solve. Most traders either enter when the move is already tired, or they give back a big chunk of profit because they can't tell when momentum is actually dying. This thing is built to answer one question. Is momentum really behind this move, or is price just faking it? Look at this section. When the line starts driving away from zero and those bands expand, you can see momentum is really pushing in one direction. That expansion is the market stepping on the gas. When the line curls back towards zero and the bands squeeze in, that's the move running out of steam. So at the simplest level, far from zero and wide bands equals strong directional momentum. Near zero and tight bands equals cooling off, potential shift. Watch this crossover right here. The line was below zero, kind of sleepy, then it hooks up, crosses the zero line, and the candles on price start aligning with it. That's usually where you say, all right, buyers are actually taking control now. For a long, you'd be interested right after that shift from negative to positive, especially if the move is expanding and the bands are starting to open. Flip it for shorts. Here, the oscillator is stretched above zero, showing strong bullish momentum. Then it starts flattening, curls over, and drops back through zero. Once it settles below and starts pushing down with the bands following, that's your bearish transition. That's where you either cut longs or start looking for short setups, depending on your style. Now entries. Imagine you've got a clean uptrend forming on price, and down here the oscillator has just crossed from below zero to above zero. First thing you want to see is, does it actually expand, or does it just barely peek over and stall? Look at this example. The line crosses above zero, then the very next few bars it pushes further up, the bands widen, and maybe you even see that colored zone fill out as it hits stronger momentum levels. That's your confirmation that this isn't just a little bounce. Momentum is actually building. Long entry makes a lot more sense here than if it were just flickering around the midline. For exits, the tool is basically your momentum stopwatch. Once the oscillator starts turning down, bands begin to contract, and especially when it starts gravitating back towards zero, that's your early warning. This move is aging. When it finally crosses back under zero, that's usually the point where you don't want to be stubborn with longs anymore. Watch this sequence here for a full walkthrough. First, the oscillator is below zero, drifting sideways. No reason to rush in. Then it hooks up, crosses zero, and you see two things at once. The line extends upward, and the distance between the line and its bands increases. That's your momentum is expanding cue. You take a long. While price trends up, every pullback that doesn't drag the oscillator back to zero and doesn't cause the bands to collapse is just a pause, not a reversal. You keep your stop trailing along the momentum trail logic. Think of it as letting the indicator decide how much noise to ignore. Eventually, the oscillator peaks, starts rounding off, and you notice it no longer makes higher highs. Bands start to narrow. That's the contraction phase. When it finally cuts back below zero, that's your clean exit signal. You've basically ridden the main body of the move and stepped off as momentum flips sides. Another nice use is treating the zero line like a regime filter. Look here, the oscillator is stuck below zero for a long stretch. Any quick move above zero that immediately fades and falls back under, you can treat those as low probability longs and instead use them to time shorts back into the prevailing momentum. Same for the opposite. When the oscillator lives above zero, you prioritize longs and treat dips below that snap right back up as opportunities to join the trend, not trade against it. You can also tweak the sensitivity. Shorter settings will make it react faster, which is helpful if you're on lower time frames and you want quicker signals, but it will also make noise more visible. Longer settings will smooth things out, better for swing traders who only care about the big momentum waves. And yeah, this thing works best when it's not alone. On the price chart, if you pair it with a simple trend-following tool, say a moving average or a trend bias indicator, the job becomes only take bullish oscillator flips when price is already in an uptrend, and only take bearish flips when the higher time frame bias agrees. The oscillator becomes your timing tool, not your only decision maker. The real edge here isn't just buy when it crosses up, sell when it crosses down. It's seeing how momentum expands, how it contracts, and using those trailing dynamics to stay in your winners longer while getting out when the move is clearly tired. Once you watch it for a few different markets and time frames, you'll start to recognize that rhythm. Quiet around zero, punchy expansion with wide bands, then a slow fade back toward the middle. That rhythm is what you're trading.